Okay, we are live. Prospero.ai stock market live stream. It is Monday, November 13th. Um, the markets are looking interesting today. Seems like we might have the Bear George back, but we'll let him explain his newsletter and how he's feeling about the markets for himself. So, George, if you want to give us your insights.
Yeah, no, don't be too quick with the Bear George. I think that actually what I'm seeing some interesting. I'm seeing the technicals on the market start to, especially on like the 30, 15-minute chart on the QQQ, start to look a little downward. Yet, I see net option sentiment up at 56. I just checked it, and SPY net option sentiment is up at 28, and both of those are bull levels. So actually, this is the kind of thing that last year when I was mainly using like the index signals to trade the QQQ and the SPY, these are actually some of the kind of opportunities that I looked for. So if you trade them and you see like what I would advise if you look at technical signals, I would advise if you see QQQ kind of like stay up at these like plus 50 levels and you actually see the technicals start to reverse, that is actually I think could be really exciting trade. And were I to be trading right now, I probably would be looking at that myself. Um, but yeah, we actually went a little more bullish than bearish. I know we started last week at five bulls and two bears. And we ended it at five bulls and five bears because I kind of saw some concerning midweek data. But this week we went back to four bulls and three bears. Because yeah, there's a lot of interesting stuff. Like as I said in the newsletter, maybe you'll pull up some of the charts when you do the videos. But there's really interesting data. Short bets on the Magnificent Seven have really decreased. Market optimism is as high as it's been in a while. And kind of like the net short bets on the market are as low as they've been, I think, since, I think it's at either June or April. One of those stats is actually as far back as a March, I think, of the three that I just went. So we're looking at a lot of optimism in the market. On the other side, we saw the credit rating downgrade from Moody's. And I think that, like, in light of all that other data, we are kind of seeing that taken at least moderately seriously by the market, that Moody's downgrade. So I think there's signals in both directions. But in light of all that, I actually think the way the option sentiment readings are operating, I actually think that uh, we could be going bullish the rest of the week. Um, but, obviously, we're gonna talk about CPI later. There's a lot of variables that could kinda interfere with that forecast, and as we always advise, you really have to look at this stuff live and on an ongoing basis. But yes, not as bearish as you might have thought. And just in closing for like this opening thing, like I think we always talk about optimism in two ways, right? When there's kind of like a mounting level of optimism. You could look at that as like, wow, like everybody agrees that the market's going to go up. But there's kind of a flip side where it's just like, well, when too many people agree on something, that's kind of like when the bears or the opportunistic shorters start to say like, oh, maybe we can create a top here and create some momentum in the other direction because we can make people kind of take their profits from this, what was an 8-day bull run last week. So there's a lot of complexity to that, and it's very easy to see this 8-day bull run like creating a lot of like, you know you might call it residual optimism. uh but yeah, I think that like right now, like that's where we're sitting. The same place as last night, even though we've started off a little bearish. I think we're a little more bullish than bearish, but we definitely see both stories and would advise anyone um, to be pretty hedged in this market.
Yeah, so you mentioned the Moody's downgrade where they didn't change the AAA rating, but they changed the outlook from stable to negative for the US. And then you have things like global debt hitting 307 trillion. I think consumer credit is hitting a all-time high. So like with all these negative macro factors, where is the bullishness that you're seeing coming from? Could it just be like the end of year, the season that we're in?
The Santa rally, as they like to say. Yeah, I think some of it is like the market can be very cyclical. We're obviously going to talk about earnings a little later. Earnings have been coming in well. I think that's part of it, and I think we have a lot of enthusiasm over AI still, and I think like it's not just, there are these broad kind of, things like tech is always very exciting. And like we said, the Magnificent Seven, the bets against them are going down, down, down. And that's a really the short bets against them. And that's really, really important in terms of how the market is viewed overall. Because those keep in mind, um I think it said that like most of the gains have been from those 7 stocks this year. I don't know the exact number. I think it might have been like it's up 14% and like a lot of that is the Magnificent 7. So the fact that like we have seen those stocks carrying the market and now we're also seeing short bets decline, that says a lot about AI specifically, and those companies all like touch AI pretty well. Um how much like how well that's being forecasted as a market as like an ongoing bull event. And I think that's kind of like the story of the second half of this year. We basically had like we talk about this all the time. The story before this like AI rally was that unless we were cutting rates in the second half of this year, the market was going to be a very bearish market. But we're still like there's still possible rate hikes at the end of this year in the forecast. I think last I checked it was like 20% was the highest for any of the coming meetings. And we're not really seeing a dominant probability for a cut and now until like halfway through 2024. So, yeah, I think what is the missing thing there? The missing thing is that like nobody was anticipating this AI rally when they said rate cuts would be required. And it looks like, even with the existing rally, there's still more, kind of enthusiasm for it. So yeah, I think that like we are absolutely in a place where people are still bullish on like that tech story, especially. And when you see kind of like and we talk about this in reference to like the Prospero signals all the time. It's like that's why we follow the option markets, where just like a lot of technical indicators will tell you when stocks have moved up this much that they don't have more room to go. But when you're looking at the options markets, like there is still a lot of optimism in these stocks, especially a stock like Meta. Um, that just like that enthusiasm hasn't waned in the long-term options markets especially, but it does well on that option sentiment or the short-term option markets a lot. And that's just the market saying they still don't think it's overpriced. They still think it's probably like underpriced relative to where it could go with like all of its growth opportunities that we talked about, like its own generative AI plays. Um, and a lot of other things. Hi, Wolf. We missed you. You're always very positive. Thanks for coming. Um, and and yeah, I think that that's a really big important thing in my mind. And just to let everybody know that's here, if you haven't checked out the new Prospero.ai app, sometimes you have to do the update and reload it. It's looking really really cool. We had like someone who was a creative director at Apple for 7 years design it. That's just the beginning. This is like our MVP. We have a lot of actually features that weren't even in the old app that are going to be coming off the assembly line in the next month. Um, so yeah, pretty exciting time.
Yeah, it really looks amazing. When I checked it out for the first time, I was shocked with how good it looked. I mean, you were telling me that it was coming along great, but it really is like amazing. So you guys should check that out if you have your phones on you. What did I want to talk? Oh, you were
Yeah,
talking.
well, I'll wait for your second. I'll say one more thing because I think
Yeah.
it's like pretty funny. When I was demoing the design for a little bit, like probably like 3 or 4 months before it got here, and I used to really like the design of our old app, and now, like, when I was, like, showing people the old app, I was always just like, "Oh, man, this old app is so ugly." So, it shows, like, what good design can do. It's kind of like I would make the equivalent to, like, you ever see, like, when cars get older? Like, I remember thinking, like, oh, like, back in the time when you see, like, a BMW, you're like, "Oh, that's like a cool car," like relative to like the other, like the Toyota or like whatever. And then you see like an old BMW compared to like a new one, and the new one like looks like a spaceship, and the old one looks like like a car, like or like like halfway between like a spaceship and a buggy. So I think that's how I felt about the old app.
Yeah, it's a good analogy. But before, when you were speaking, you were talking about how most of the gains have come from the big seven. And it's definitely true when you look at the Russell and all these small cap stocks that have not participated in the market rally. Can you explain why that's happening currently?
Yeah, I think that's what's really interesting when you look at this stuff is that, growth stocks are traditionally like the big gainers in bull markets, and a lot of the times even as bear markets wind down, and we started to see like, a bull rally this year. But Actually, and I even fooled until I was even a little fooled by this until I looked at the hard data. But yeah, basically, like the big growth stocks, if there isn't profitability to match, they're not doing well. And that's just like the story of the Russell 2000. you know, just so people can understand the mechanics. Typically, when you get to a certain level of profitability, that's when you get to, the Russell 1000 or the S&P 500 because they're just like looking to churn out that profitability. And just so you know, like that's how you get returns. Like historically, like there's no greater like growth is nice, but there's no greater um price engine than just like profitability, ongoing profitability. I might be speaking the obvious to a lot of you, but it's not always like a lot of retail gets burned on growth stocks. So it's not obvious to that many people, as obvious as it happens. So yeah, so we look at a lot of like profitability plus growth. And just as an extra reminder, like we recommend any long be above 100 and you'd really prefer over 120 in the profitability in the Prospero app for profitability plus growth. Uh, and yeah, I think that like we have seen success by adding profitability and growth. And it wasn't until I isolated the growth numbers that I actually realized how bad growth stocks had been doing this year. Pure growth, where you're talking about like kind of profitability under a 50 rating, and growth like even if it's very high, kind of not being enough. Um, so yeah, I think that, tying that back to the S&P and the Russell 2000, the Russell 2000, you get there as you start to be profitable, but people are typically forecasting more growth for those companies, and they have a brighter future than kind of the older guard on the S&P 500. So, when I hear that and I see that on an ongoing basis, to me that says like people, especially institutions, are not getting excited about growth yet. And it's until they get excited about growth, I would make sure you were looking for, like we recommend, profitability plus growth, or even just pure profitability. So if you're looking at small cap stocks, and if you're looking at them in Prospero, wherever, like I think, if you're not looking at Prospero and you can look at like above average, so a 50 or greater profitability rating, even if you're looking for a growth stock, I think is really important. But if you're looking at just normal EPS, I would make sure that number was positive. And I think that's kind of like an easier like, hey, if you're not in the Prospero app, I think you should be. But if you're not, look at that EPS. Make sure it's even if it's a growth stock, make sure that company is at least forecasted to earn money this year. And I think that that's just a good way to protect yourself if the market does turn down. And like you can see like all the time, just so people know, in my model portfolio, I'm looking at growth and profitability all the time. So you don't have to ignore growth or say like, oh, I'm not looking for like exciting companies with a bright future, but it's helpful to look at both. And I use this example all the time, but just to drive it home a little more, I think that the full picture of what we're looking for in the signals is really important. Like if you take Nvidia, for example, Nvidia is our highest profitability plus growth stock. It's an 83 profitability and an 80 growth at the last time I looked. But yet its upside breakout, which is like our probability that the stock will have a big move up, is only at 61. Uh, and why is that? That's because like despite that profitability and growth, that's institutions saying that we're not as excited about the upside as like the 40% of, or actually it's not 40% because it's a bell curve of like, I would say the many companies above Nvidia an upside breakout in terms of how they're pricing the options in the market. But you look at something like Meta, which actually has like an 82 profitability and a 61 growth. So not as exciting of a growth story, but that's a 100 in upside breakout. And that's, kind of what we were talking about at the beginning. That's the market saying like, oh, we don't think a lot of this growth and like future profitability is properly priced into the stock price. And to kind of close the loop, you can look at Meta has an under 20 2024 PE, and you have Nvidia at close to 60 2024 PE. So that closes the loop for you guys, where you're just like, okay, that's what Prospero sees in terms of like how much of that profitability, future profitability and growth is being priced in, and that's matched in like hard value investing numbers when we look at those 2024 PEs. And that's honestly the best investing advice I could ever give anyone. Use different sources and verify that they agree. And to me, that's a strong agreement in the Meta and Nvidia story that we're basically seeing that Nvidia is a more exciting profitability plus growth story, but if you look at the PE, if you look at the way the long-term options markets are pricing Nvidia, they're saying that too much of that profitability is already baked in. And in the case of Meta on the other side, not enough of their, lower profitability and forecasted profitability is baked in. And that's why it's so important to form a cohesive picture because I see people all the time being like, Nvidia, Nvidia, Nvidia. It's like, I like Nvidia. Who doesn't like Nvidia? But it's just like, that's actually a problem sometimes. If everybody likes NVIDIA so much that they're making it more overvalued, especially relative to Meta, it doesn't matter how good of a company it is. It matters how good of a company it is at that price. And that is the most important investing lesson anyone can ever learn.
And I can already see the people typing when I post that as a short getting triggered by it, the truth, which is that Nvidia is priced for perfection, right? So like it's like people, everybody knows that it's such a great company, so it's priced for that already.
Yeah. The NVIDIA people get really mad when I say that, but
Hmm.
it's true. Like it is, it's got an 80% market share and it's priced that it's gonna keep that. And like the thing about NVIDIA that just like it actually blows my mind is that like, they had 100% sales growth last quarter. They could post like 60% sales growth, which for a company of its size is just absolutely insane. And the stock could go down on that day. Like that's like the absolutely crazy thing where it's just like, yeah, like as like Nvidia is great in a diversified portfolio. And actually what I increasingly do is I kind of list the number of stocks you'd have to have for me to recommend it. And I'd say if you have 10 or more longs, Nvidia is a great stock to have in there. If you're a little more concentrated, if you're a little more high conviction, it's not a top five stock in my mind. Um, and I think that's like, and if I just want to name them, I can name my top five long holds right now to be a little diversified. I would say they're Meta. I would say Tesla. I would say, I hate to say it, but Microsoft is really killing it lately. Uh, and then I'll do Google, and then I'll do Eli Lilly for a little more diversification. Um, I think that that's really what we're seeing. And I want to get like we have Eli Lilly, and maybe I want to give a six because I think that might still be a little too much concentration. So I'm gonna give a 6 recommendation. And you can kind of see how Nvidia gets bumped there because like we already have like Microsoft, Meta, and Google. Um, but hold on, I'm gonna get you a 6 for a little bit. Let's say PH. Nice industrials company, Parker Hannifin Corp. That'll be my 6. That'll be my little mini like hold for a year portfolio, and we'll mark it. We'll see. Let's see how it does. We'll see if it beats the market from here.
That's a good idea. And it's just crazy. Like was seeing last week, Microsoft was like ripping through its all-time highs, and not many companies are like at all-time highs, and Microsoft is just the train that keeps on chugging. It's crazy.
I mean, we talk about it, and some people don't like that we don't say that we're good at innovation. But like Meta, our favorite company is like all year is not very good at innovation. They just acquire. So like some people have these weird attachments to these companies. But yeah, like Microsoft has that really good B2B software base that's just like a cash machine. And to add like an exciting growth product like ChatGPT, like yeah, like I rag on their innovation, but and at their price, Microsoft is kind of in between on PE on 2024 PE, where like the I'd say about in between Tesla and Nvidia and Meta, a little closer. They were about a 30 the last time I looked. Um, but yeah, I think that like I think a company could be both bad at innovation and a great growth company. I think because through acquisitions, and I think a lot of people might not see that as possible and see when I say that I'm saying that they're not going to grow. But no, like I think that's a really good like point to make too. Like I would say that like we're excited about Meta, we're a little less excited about Microsoft, and we're far less excited at Apple. I would say all three of those companies are not very good at innovation right now, and we have like three different opinions on them. And I think that like Apple has not been growing, and we don't necessarily think unless it like really comes out with a new product, we don't expect it to grow. Those other two companies we do, but like there's a concept in value investing called GARP, and it's like growth at a reasonable price. And I would consider the growth built into Meta like very reasonable. I would consider maybe like what we're looking at with Microsoft like reasonable. And you might say like Apple's the unreasonable like growth there because it's still kind of being it's still like priced um it's still priced at 2024 earnings um higher, like closer to Microsoft than it is to Meta. And that's really weird if you like talk about all the stocks that we've talked about on this channel today, where it's just like Apple is shrinking its sales. Why is it priced at a more attractive profitability multiple than Meta that is, I think grew I don't know, like maybe 20%. I'm confusing the last two. I mean, growing a lot more. Let's just put it that way. I don't want to get the number wrong. So I think that that's a really, really important way to look at it.
Yeah, so we hit on your six favorite stocks over the next year, but a question I've wanted to ask you now for like over a week is I wanted to hear your best case scenario for the stock market in 2024 and your worst case scenario for 2024. So we're going to get the high and the low of the entire 2024 year for the stock market.
I'm never very good at at remembering like the prices and doing that kind of mental math. But I think I think we're looking at, you know, plus 20%, minus 20%. I mean, that's in like that's like in what I would say like the most likely distribution. Obviously, there's like possibilities outside of that, and I'm not going to do like ridiculous best and worst case scenarios that include like moderate black swan events or whatever. Even just like World War III, like I'm not going to touch that or like a Taiwan invasion because obviously those are big bear cases. But I do think it could swing that much in either direction in like a there could be a logical case made for either one. And I will say this. I think if there is that 20% down, I expect it to be kind of a tale of two markets where the market starts off like really bad in 2024. We start to see like a lot of this, like, maybe more persistent inflation, more resistance to lower rate, start lowering rates as a result, and just like rates aren't getting lowered, yet we're going to start to see like more and more of this economic impact of the rate increases. Like if we don't at least have rate decreases on the horizon, like I think the real estate market could get pretty ugly in 2024 and drag a lot of stuff down with it. Um, so I think that like that's pretty important. Um, and then yeah, I think the bull case is like, even this Wednesday we could start to get like a good inflation report, a lot of excitement, more AI growth, more like computing chips growth, all of that. And like even if we see a downturn in like, things like consumer cyclical stocks, which I think we're going to talk about in a little, even if we see that downturn in spending and things like that, we talked about like, also like how personal credit and debt are just like ramping up, like to flip back to uh the bear case for a second. Like, yeah, if we do face more economic difficulties, that's the kind of thing that can make it snowball, like before we get that late year recovery, like I'm talking about. But yeah, back to the bull case, I think we can see those things maybe not have a huge impact if like the stock market is doing well, and rate decreases are on the horizon. We get that soft landing that I think Powell is like really wanting to do everything possible to go for. Um, but then, yeah, I think the other thing, like those are like I think the two most likely scenarios. More like kind of like a hard start to the year and then a recovery towards the late end of the year. Then there's just kind of like the more steady climb with like, you might call it like volatile up. Like we get these downswings, but we're moving up slowly. I think that that's the bull case, and we just kind of like get to 20%. The only other thing that I think is worth mentioning is like the election, obviously. And I think that like as we move closer to that, um, let's just say I think there could be a lot of concern without getting too specific about what people might be concerned about. And I think both sides of the aisle could be concerned about different things. Um, I think that is kind of like somewhere in between, like what I talked about is like a black swan event and like the regular case. And I say that like kind of in between stuff because essentially what we're talking about is um, something that like I'd say it's reasonable to expect that there could be some turmoil around the elections. Um, but like where I fall short of being like, okay, it's reasonable to expect some turmoil. Where I fall short, and this is like a good lesson in probabilistic thinking, it's like, well, there could be some turmoil, but you know, do I know for sure how that's going to affect the stock price? Like, no, I don't know. Like, there has to be A, be turmoil, and then B, have a certain forecasted result on the market. And like, hey, there could be turmoil around the election, yet we could be lowering rates. There could be a lot of economic excitement, and we could just like blow right through that turmoil. And that's actually a really good way to think about like how models work, right? Because like basically like while I'm saying it's reasonable to expect turmoil, like what I can't do is I won't take two layers that I won't say like turmoil and a downturn because you're just basically building one event on another and one requires the other. And like if you're not if the first event is just like reasonable and not like closer to probable, and then the second event is just like, you know, more of a toss up, like there's not enough probabilistic meat there for me to say like this is one of the like base cases that I listed, but it's certainly a case that people should watch out for. And I think like the if then is important. Like if we don't see like that strength by the second half of the year, start to see rate cuts, and we're approaching the election, I personally will be there. I'll be very defensive in how I'm organizing our portfolio.
Yeah, so you covered my question. I was going to follow up and ask you about the election, and it's interesting to hear you speak about that. But maybe I'll just ask you something else. So, in your scenario of like a bear case where it goes down quickly in the beginning of the year, do you think the rate cut cycle would be moved forward a lot to counteract that, or do you think they wouldn't be able to cut rates that quickly, or what's your thoughts on that?
Oh, absolutely. I think that like that's part of actually what I'm calling like a second half rally in that scenario. Because I think if we do see that case where we're seeing economic difficulties, um, we will see the Fed. You know, we like one of the things like that I can say about the election, and I try to say things as much as possible that are true for both parties. Um, and yeah, I think what is true for both parties is like both will try to prop up the stock market leading into the direction, leading into the election. So make no mistake about it. I think that if we start to see a tough start of the year, Powell's going to get pressure from his boss to start to lower rates or at least talk about lowering rates to help the market rally. So I do expect that's why I'm just like I really do expect a second half of the year bull run because I think even if the economic conditions aren't quite there, the macro conditions, the macro variables will be adjusted to help get that outcome.
What do you mean, Powell's boss? I thought the Fed's independent.
Yeah. Yeah, everybody's independent, right? And the political parties don't care about the corporations either, right?
Yeah, yeah.
Powell's
Well,
boss, I meant the large American corporations. That's his boss.
mhm, mhm. Or the
And the hedge
voters, but
fund and the people that run hedge funds and banks.
yeah, right. So here's a company that we haven't talked about yet, I don't believe, on the streams, which is kind of interesting because they're kind of like a monopoly in their own right. So Boeing had some news today where like Emirates Airlines ordered 95 planes, which the total order is like over 52 billion, which sounds like crazy. I can't. I mean, these planes are like half a billion each. It's kind of nuts. But I wanted to ask you about Boeing. Do you like them as an investment? I don't know. They've never really like regained their steam since COVID, and just what does this order do for them?
Yeah, wouldn't you know it? Planes are expensive. um, yeah, I think Boeing's interesting. I see it going up a lot in net option sentiment. It's got decent profitability plus growth. Like, uh, it's not like its upside breakout is 50, its downside breakout is 30. So we don't typically like that. Actually, has the difference. We generally say we want upside breakout to be 20 more than downside breakout. Um, so yeah, I think that like it does reach that like very base check mark for a long. And I mean, I think like anyone that's not like making um that's not making defense a part of like their diversified portfolio. As we start to go out to like 10 stocks, I would say part of that 10, you want like a Northrop Grumman or a General Dynamics. Those are kind of some of our favorites, but easily a Boeing too if you want just to diversify. I think like in light of like kind of like some of the black swan events that we're talking about, like wars or like whatever, or even like, this war intensifying more, like defense stocks are a good defensive position to have if you're a long only portfolio. So yeah, I think Boeing could be there. It's not one of my top. It's in like, the top five, I would say, in terms of like what I would like and what I see in Prospero in terms of defense stocks. Um, but obviously like aerospace, any aerospace upside is pretty good, and it does look like it's doing well in the short term signals right now. And you might want to, if you want to get in and you trade short term, not a bad idea, but to time it now because I did see it at 87 net option sentiment. Uh, but yeah, I think everybody wants to think about if you're long only, like that level of diversification. Absolutely.
Boeing just has to figure out how they could incorporate AI into their planes, and then we know their stock will go up, right, for the rest of the year.
You know what? Planes use a lot of AI. Uh, it's just like old stuff, a lot of them are on autopilot, these days. Like pilots are like barely like I think they pretty much just like take off and land the plane now, and even then I think they have like assist. So yeah, I think it's only gonna be so long before like the machines are flying the planes. But like yeah, I'm like one of the things, like anytime I get into one of those like automated elevators where you can't even push the buttons anymore, that's like I'm just like, oh man, all of these things, we're gonna be the first to go when the robots turn on us. Like I hate seeing more of those automated elevators. It's like anybody in an elevator is toast during the robot revolution. Same with these like automated planes. But it's like that's logical to think like, oh, if the robots rebel, if I'm up in a plane, I'm in bad shape. But I would have liked to think I was safe in an elevator. But yeah, watch out. If anybody thinks we're on the brink of a robot war, watch out for those automated elevators.
Yeah, everything is getting automated. It's nuts. But what I wanted to bring up
Did you
next
think we would go
was
from Boeing to robot wars there?
no, that was a turn I wasn't expecting. uh, that's why I'm having trouble like swinging into the next thing. But so what I wanted to bring up was like almost all the earnings are in. Over 90% of the companies have reported, and EPS growth has grown 6% year over year, which is pretty good. But we have a lot of big retail companies reporting this week, wrapping things up. And what's interesting is they're all expected to decline in year over year EPS, and the market's gone up 6%. So that's like a kind of a very big difference. So we have Home Depot, which their EPS is expected to decline about 15% year over year, a lot. They're reporting Tuesday before the market. You have Target Wednesday, and you have Walmart Thursday. All these companies have beat in their past three earnings that they've reported. But do you think it's like very important and something to watch for that all these companies are shrinking year over year?
Yeah, I think there's a lot of interesting um there's a lot of interesting things there. Obviously, we've been saying like consumer cyclical stocks like that. That's one of the things that have been like our bread and butter shorting their stocks this year because we've kind of been like, oh, versus even like finance stocks. We want to like target those because we think like as people are more worried about consumer credit, spending like on those kind of goods are the first thing to go. And I do think another thing that we're seeing, and we're seeing a lot of companies report on, is theft. And we saw Target like call it out in particular. And I think like yeah, I think a lot of these consumer cyclical, a lot of these like retail brands, as an offshoot of like traditional like financial strain and people just having more money to spend, I think like as people get like more and more like kind of fed up with like the conditions surrounding this, and I'd say wealth inequality and things like all the corruption we see around the world, I think theft becomes a more viable option. And like I don't know for those that don't know, like this is my second company. My first company was like an AI as a service company, and the model that I started that kind of like built my career when I was 25 was a mortgage model where I essentially figured out that people actually weren't paying their loans more due to state laws than they were to like debt to income ratio, like how much money they actually had. Like it actually had less to do with their ability and more to do with state laws. And there was this thing called moral hazard uh, that was talked about in the mortgage industry. And like the moral hazard was like that people wanted to pay their loans because they didn't want the shame of going through foreclosure, or like that they were like not honoring their contract. All that stuff was like something that the mortgage industry actually counted on. But they really lost that in the crisis. And like why, I actually like was able to model that behavioral shift is like when I was at in an entry level, I actually rotated around to entry level positions and I was talking to a lot of borrowers, and I just found like to the moral hazard like not existing. And a lot of people were pissed off and they said, I don't owe these places anything. They appraised my house too high. They got me into like this predatory loan. Like, I don't care if I don't pay the money. In fact, I'm kind of happy I'm not paying them money. And they would try like every little game to like, yeah, in certain states, you could not pay your loan for 4 or 5 years. Um, and that's even if they did everything right. Like one of my things that my model found was that people weren't paying their loans for like as much as like 10 years because the system to like figure that out was such a mess. Um, but yeah, I tell that story because like even back then, I saw like the idea of like moral hazard or like don't do this because it's like right or wrong. I think a lot of people feel wronged by society. Um, and theft becomes like a more and more viable option for them. So yeah, I absolutely think that is one of the reasons that we model down retail stock, consumer cyclical, as a sector is called, because yeah, they're going to be dealing with both um, less available spending and less willingness to spend money on those non-essential goods. Um, and I think we're also going to see, like, I think theft is a real part of our future and increasing theft a real part of our future as this idea of moral hazard subsides and people say, like, people look more like it, like that society, because it's wronged them so much, owes them things, owes them those goods that they steal. And yeah, I think that's kind of like a disease that spreads. Like, the more people feel that way, the more they get away with it, the more other people kind of see that as a viable option for them. And yeah, I actually think that that's like um any like the biggest sign that this is like a very real thing for everyone is the fact that like cameras are more and more prevalent. It's easier to catch thieves than ever, yet more and more people are doing it. And I think like that's because everyone's just kind of accepting that it's part of society now. And like even like Lululemon has this famous policy that we've talked about to like not stop thieves. And they just have like a very like they have a very good insurance policy on their goods. So like part of the story is I think they even don't mind theft because theft like actually like is logged as, I mean, I don't know what kind of margins they make on this stuff, but like maybe like the normal full price margin. So I think that's like actually part of their sales strategy at this point, the insurance policy, people stealing and that being like logged as sales. Um, so I think, yeah, like I think if you see like, if you see like both surveillance rising and then you also see theft on the rise, we're basically seeing like an increase, and I would say call it like a decrease in, the policing of these things. So like if we see that combination and we also see companies being like, well, we don't even care about that. We're just gonna let people steal from us essentially. I think that yeah, it stands to reason that we're going to see more and more of that. And maybe companies that like, Walmart and Target, that it's just like they can't they can't pay the insurance policies for that theft. They're better off trying to police it because like so many people go into those stores and like especially Walmart, lower income people, they have to tackle the theft. They can't insure all those sales. That would cost too much money and eat into their like very low margins way too much. Um, so yeah, I think a company like Lululemon with higher margins can afford like to pay insurance as part of their sales. Um, but yeah, I think that like that's absolutely what we're seeing. We're seeing like a lot of businesses grow and those businesses not grow. And I think that might be something we see in the foreseeable future.
That's definitely an interesting point, and I have heard them, like, actually reporting the theft numbers in the past couple quarters, so I'm gonna look for that this week. Um, but this is the first time in my life that that's been a problem, so as you've gone through your, like, adult life, you're a couple years older than me, did you see that ever in, like, past cycles, or is that, like, particular to now?
No. I mean, I think like I think in economic difficulties, like theft always does go up a little bit, but I think it is much more of I think it's much more of an issue now. And I think that like I think part of it um is that policies like that Lululemon thing don't help. And like I think that's maybe what's different. Like I think there used to be more of a policy of like we're going to stop theft. Um but I think now it's there's people that are just like, kind of like I say like the horrors of late stage capitalism. Like some of these businesses are just accepting theft as part of it. And I don't that's what's not part of a cycle. And I think that acceptance of it, obviously it's very easy to see how that like perpetuates more theft because like the main thing that is going to stop theft is people getting caught. So, if you see people around you getting caught for theft, you're going to be less inclined to do it. If you see people around you getting away with it, you're going to be more inclined to do it.
Yeah, and you don't think we're like in the like doldrums of theft right now, like as in like we're bottoming out on the amount of theft that's and then it's going to be like corrected. You think it could continue like for the foreseeable future where these companies just like don't you think they'll react in a way where they will like start charging people for it and they will like find a way to I don't know, not just allow it?
No, that's complicated because like some of like why Lululemon is doing that and why they go like the insurance policy is like it can actually be like way more expensive than all the theft if like one of your employees gets like killed trying to stop theft or hurt, that's a massive lawsuit, especially if like it's a reasonable expectation that you were going to get theft. Like, yeah, you could be liable as a business for that. So I think that if anything, like I said, I single out Walmart specifically. Their margins are so low. I'm not sure they can insure, but you might see like a place like Target say, you know what, this is just like such a big problem. We're going to insure it too, and we're going to stop trying to stop theft. Because even the fact that it happens, there's a very interesting story about Target that like um, a lot of pregnant women were getting ads for like pregnancy like diapers, like prenatal vitamins, things like that, even before they knew they were pregnant because of the behavioral analysis, like the advanced predictive algorithms that Target had. They knew the kinds of things that were being bought as women, like when women got pregnant, and even before some of them knew. Um, I say that to say that like these Target places are, peppered with cameras and everything. So like, I would say that they probably have pretty good predictive capabilities on theft and if someone's going to rob for them. So the fact that it's still such a problem probably more likely means that they haven't had an effective way to deal with it, not that they don't know it's happening. Or another thing I suspect where it's just being used as an excuse, they allow that to happen. And instead of like management being like, oh, actually, we don't know what we're talking about, we're just running the company poorly. Like they're, allowing the theft to happen and then being like, oh, all this theft, this is our problem.
You kind of talked about how their margins are so slim already, these like retail companies, but I wonder if they don't already, if they'll price theft into their like prices.
I'm sure they already do. Like like these companies, they're all algorithms, pricing algorithms. Like I'm sure that theft is already priced in if it's that big of a part. um but yeah, like I'm saying, I think like I think they could do more to stop it, and they're choosing not to, or they just don't know the solution. Like I imagine it's cheap, like I imagine the theft might still be cheaper than the number of security guards that they would need to like act like police it. And also it's just like there's complicated lawsuits on all sides. Like let's say you stop someone that you just like think was a thief, right? And then uh and then especially if it's like a marginalized group and the person didn't wrong, like the person did wrong, or they did, and it's just a bad look for your security guard on the video, and that goes viral, and all of a sudden you're a company that like doesn't care about marginalized people, for example. All of a sudden that like marketing hit or like hits your stock price because of the social story, like is much more expensive to you than stopping the thieving. So like that's what I mean about just like these like societal problems, they don't have solutions for a lot of these companies right now. And like, the lawsuit from the person that stops them, or the bad press for the person that stops them wrong, or was wrong to stop them, which are two different things. Like all of that, like actually is potentially more costly than the theft. So I think that's one of the reasons that we see it happening because like as we're saying, there's no like singling out target. Like if a company can predict and know if someone's pregnant before they know it, they know if someone's going to steal something before or as they're doing it. Like that's an easy AI problem. Like you could find like, I remember working on a project with someone like 10 years ago that was like trying to spot a concealed weapon in someone's jacket. And like that is something that is obviously like pretty hard, but like, if you're talking about the way someone like reaches into a thing and puts it in, like, yeah, that's a problem like well suited for AI if a company has the kind of AI that could predict if someone's pregnant. Um, it's just a question of like not knowing what to do with that information and how to stop people. That's the real issue.
That just instantly makes me think, like, if Target can predict that, imagine what Google or, like, Apple or Facebook, Meta could predict about you with, like, their AI has to be, like, so much more advanced than Target. So, like, imagine they know everything about you probably.
Have you seen any ads to yourself? Like, yeah, like all the time. Like I get like I'm having conversations with people and then all of a sudden I'm getting an ad about it. Like actually, unlike a lot of people, I don't mind that. There's some people that are just like, oh, it's listening to me. I'm just more like, well, we're already in this like police surveillance state. Like, at least I can get the products I want fed to me. Like, and my general attitude on it is actually like even more than that, where it's just like, you know, of the people that like have all of my data or like whatever, like I'm much happier with like Google knowing everything about me than the US government. I'd say the US government I'm much more afraid of than Google in terms of like any negative consequences for myself. So yeah, that's kind of how I look at these things. It's just like, well, if I don't have privacy anymore, at least I could get served the products that I might want anyway.
And before we got into this little AI spin, we were talking about the theft and how there's no solution right now. But maybe one guy in America actually might have a solution. He's working on legislation. His name is Brad Gerstner. He's a popular and like pretty famous VC investor. He's been going around with this idea that he wants the U.S. government to start putting $1,000 in a like our IRA account for every kid born in America. It's about 3.7 million births per year, which would be $3.7 billion spent, which is less than 1/10 of 1% of the US national spending. So, do you like this idea? Do you think there's any chance this could ever happen? Is this the beginning of socialism in America? What are your thoughts on all of it?
Hey, I love the idea. If the Pentagon is allowed to lose trillions of dollars, like I think we can set up every child with like a better life. But I'd actually go further than that. I would have like an income test. I wouldn't give it to every child. I would give it to like every child under a certain income. And I might even skew it down where like people under a certain income, like their parents' income, obviously babies have no income, at least I hope. Um, some might have like trust funds set up for them by the time they're born. um, Perfect example of the people that don't need that money. But yeah, I think it's a great idea. I think it's necessary. I think like obviously we talk about like the path of AI, and I do think it's going to put like a lot of people out of jobs. And I think it will create jobs too, but I do kind of expect there to be like a bit of a disjoint thing where like the jobs that are available are not necessarily the jobs people are trained for. And like, maybe that'll get corrected, but I do think it'll need some time to smooth out. Um, but yeah, I mean, this is something that like Prospero is keenly aware of, and a lot of the reason why we started it, and we're trying to like level the playing field because, I think wealth disparity, like I think there's a lot of problems, but I think like a lot of the things we argue about and the strain between us are a symptom of frustrations of wealth disparity and feeling powerless, and so I think like if we don't have release valves like this where people can actually feel like something is being done to equalize things more, I do think we can expect very bad things in the future. And like honestly, that's like one of the things that Prospero wants to do in the future. We do want to make a foundation. We're actually in the process of thinking about making a foundation where we do things like that, where like, the eventual like profits that we get, especially as we build our alternative data set and are able to like invest with it on behalf of people. We want to use things like our management fees from that to do very similar things. Except not only giving people money, but helping them invest it, helping them grow that money. Um, because yeah, I think a lot of us need to be thinking about these kinds of things. Um, and you know what? I really think about like foreign aid in this capacity. Like, I don't begrudge us giving money to other countries. I think it's really necessary. I think humanitarian efforts are necessary. But like, people are so afraid of like socialism, and like, quite frankly, I'd much rather give money to our own people than like money abroad, especially if our own people are suffering. And that's something that I've never really understood. And there's like some of this weird thing where like some of the same people that are just like super nationalists in like America being like cool with foreign aid, but like not cool with helping like the poor people in our country. And I never understood that. It's like, okay, you're so American, you'd rather like send missiles abroad than help other people in this country that might need it. Um, I've never understood those things. And generally, like, I agree that we need to be spending less money overall. Just like we need to be cutting things everywhere. But I kind of absolutely look at it like an if then. Like America passes tax evasion bills, like the Panama Free Trade Agreement. Like, if we can pass tax evasion bills, I feel like we can have money for our own people. And it's really like an if then. I don't think that we need to have socialist policies. But I think if we're going to be giving handouts to rich people, it's totally acceptable to say we give handouts to poor people as well.
What do you think the chances are of something like that actually being passed, though? Do you think it's like high at all?
Slim to none. I think people like us are going to have to do it. I think like I think that I mean the one thing that I see from both political parties is they seem very intent on just like rewarding the wealthy and just like churning and churning and churning that. And I actually do think like the general behavior of our government and a lot of international governments is like they see the ship sinking and they're just letting people like all the wealthy people just want to be in their like compounds and like bunkers like when everybody else starts ripping each other apart. And that's like the world as they see it and as they behave, like we're heading towards that world. Um and so yes, like I think a lot of people see like any of these measures they need to take like a hard line of any like generosity because they think once they open those floodgates everybody's going to start coming for their money. And that's to them coming for their nest eggs for their like coming for their like disaster bunker money is like way more of a horror than like attempting to fix the problem. And that's just their general attitude. So I don't expect them to stop clutching their disaster bunker money anytime sooner. So I think through capitalist structures, um, we have to, and I do think we're starting to see like businesses that are more wired to help people doing well because that's overdue.
Yeah, and we have some people in here, and if you watch these streams, be sure to like and subscribe if you're not subscribed. We're coming to the end. I have one more topic, but if you have any questions, we love when we get questions and we can answer exactly what you're worrying about in the market. So if you have any questions, ask them now. But as you're typing them in, I'm sure we'll get some. I'll ask George about the CPI data we're expecting this week. It's supposed to come in at 3.3% for October. It was 3.7% in September. So we're seeing that gradual climb down. And how do you feel about the CPI?
Um, I think I think that it's gonna come in like I don't think we'd have this bull run if there weren't whispers like 8-day positive bull run if there weren't whispers on the street that CPI um was gonna come in well. Um, so yeah, I think we absolutely will see at least like around um the predicted number. And I think it's like a lot of what I'm hearing is that people are seeing a good path for inflation, and that's why the market um, is doing well. So I think that like I think that we expect to see that. I think like we definitely like if we see another bear day tomorrow, I think that like that's when I'll start to be like, oh, maybe I'm a little concerned that maybe there's some whispers the other way. Um, but no, I would say like I wouldn't really expect this behavior unless we see it really turn around because we talk about this in one way. Like sometimes we see it like we see a lot of shorting because people are like interested in buying things because and they just want to get a better price. Sometimes you also see like people running things up because they're putting going getting it in the best position to make money on a short. Um, so yes, I think we have to be mindful of that and watch the next couple days. But I think overall we seem to be on a good a good inflation path. But I mean, the thing that we always just have to drive home too is that like a lot of this inflationary cycle is corporate profits, like much more. I think we see like 5 times more than the traditional corporate cycle or inflation cycle is corporate profits. So like over 50% when it's typically like around 10. Um, so I think that like we say that a lot because it's like so important in terms of how we think about inflation. And like actually the biggest favor to inflation is, you know, quite contrary to the stock market, which is just like some of these profits had to get lower. Some of these businesses had to face more difficulties in order to like start to forecast it down. Um, so yes, I think that that's something to be mindful of. But generally, what I'm hearing on inflation is is that
So I just checked out the markets while you were speaking, and it actually looks like they've been rising while we've been talking. The Dow and the S&P are
yeah,
positive. Nasdaq is slightly negative still, but it seems like a
interesting.
down day that's fighting back.
Yeah, I like that. That's very to anyone who put on the trade we suggested at the beginning of the live stream going long QQQ or SPY, they're probably feeling pretty happy right now. I hope someone did that. Um, yeah, sorry, Kyle. I saw you ask this question on like directly. I have no idea what you're talking about. Um, we're not modern investor summit vendors. That's something that you buy from like that's something that you buy from Finimize or whatever on the link. I can drop the link, but I have no idea how to answer how many tickets are available. It's not our conference.
I feel like there'll
I don't know
probably
if
be
that
as many tickets as you want, Kyle.
yeah, like yeah, I'm not sure how to answer that. Um grab your tickets, secure your spot. Like I'll post the link. Yes, I'm going to be speaking at this conference, but like yes, I'm not really sure how to answer that for you or anyone, but you can like there's my speaking session is going to be there. Like I think mine is on the 5th. Um so yeah, that's hopefully that's helpful. I know it might not be that helpful, but I don't really know how to answer that question other than how I did. But if you have more questions, I have no yeah, I don't I don't know. I don't know the answer to the question. I mean, I imagine especially my segment is over the airwaves. So it's like an e-session. So like I can't imagine that there would be limited availability to that. But again, I'm not Finimize and I don't like generally um I don't think asking that question to a corporation is ever going to yield you any results. They'll probably tell you that there's limited availability, even if there's not limited availability. So yeah, I think that's part of like don't mean to be rude about the question. But yeah, I don't think if you're ever going to get like even if it was my company, you know, I think like most people are gonna like just say that like space is limited, even if they don't know if space is limited or not, just because it's like you'd be stupid to not say that. Otherwise, people are just going to wait until the last minute to buy their ticket.
Do you have your speech prepared for that? You know what you're going to say?
I don't even know. I don't even know what my like. It's a panel on AI. Um, but yeah, I don't even know. Uh, I like. I did say, and I'm very happy that they responded to this. I said that like I was very much like I didn't want to um I didn't want to talk about like AI as like magic bullets or like beating. I was like, if someone's talking about like that they have nonlinear equations that beat the market, um, I'm not going to react very favorably to that. I'm going to take them to task over like that kind of marketing thing. But they were very responsive. They said that like they appreciated and understood that, and like so yeah, it's going to be an interesting segment. I think for sure.
I kind of hope someone does say that. I'd like to see you go at them for that. Oh, we got another comment.
Um, oh,
Uh,
I
Tesla
have.
Tesla stock behavior in the past week and give some insight on what's happening.
Yeah, let me pull up I'll pull up a little, hold on, let me get it prepped and I'll pull up my chart. And then I'll also look on Prospero. Oh, the 45-minute chart is showing like a major bull event. Um, how is Tesla doing? Oh wow, it's up 4% today. Yeah, I think it's looking pretty good on Prospero too. Like here, let me pull up. I'll show you what I'm seeing. 1 second. Uh, Let me pull up maybe the daily, see how that's looking. Oh yeah, things are looking good. Hold on, I'm about to pull it up. I'll share my screen. Um, okay. So yeah, I'm even like talking myself into buying Tesla right after this call. But I might pick a short as well. Um, So yeah, like what I'm seeing is like we're seeing like the selling pressure decline here, and blowing past like kind of the negative events on. But then this 45-minute chart, TradingView shows this as like a bull breakout. Um, so yeah, I might want to look at like the 15-minute here too to just see like yeah, we're seeing good momentum there as well. I was concerned about that red candle. We're just gonna look at the five. I don't love the five for anything other than just like as this an additional sanity check. But yeah, I might go into Tesla after this in the newsletter. I'll see how it works. We're actually seeing it go down as we're saying it. I'm going to take a quick look at net option sentiment as I stop sharing my screen, um, so you can see me look at net option sentiment. Yeah, someday we'll have a web view on Prospero. But let's check out Tesla. And, um, all right, 100 net option sentiment. Actually, what's been really interesting about Tesla and something that I might like, you're like upside, the trend on upside breakout, like it has been in the 80s for a while and it's now up to 90. I think that's going to convince me to get into Tesla after this. Um, so yeah, no, I wouldn't short Tesla. I'm saying I'm about to go long Tesla.
I think you might have said that you might find another different short position that you might do, and they got confused.
Yes. Yes. No, no, no. I'm gonna say like because of the market, I'm gonna go long Tesla and short something else. But to be clear, Tesla looks like a good long right now. I'm probably gonna get into it right after this.
So thank you, Peter Lukes. It looks like you brought Tesla to George's attention for today. Um, Anything you want to say, George, before we end this? If we don't get any more questions.
I mean, I might just do like this is helpful. I'll do a quick model portfolio update here for anyone that wants to hang out. I do that some days. Um, and yeah, no reason, no reason not to. I actually might adjust right now. I'm on like a little stand, so I'll adjust this a little bit so it's a little easier for me to type. That probably works, right? Yeah. We're gonna do a quick model portfolio update. I'm just gonna get some things set up. Some people like when I do this and like, hey, it's uh um just going to get my filter set up. And I might actually include I'm gonna include growth, which I do sometimes. Um, just because I don't know. I don't know if I have one with growth and social sentiment. I'm gonna take a look. Where is my investing bull filter? Um, I kind of want, yeah, I don't know if I have anything with social sentiment and, oh, wait, I don't know. Can I get crazy and add growth here too? I think I'm going to, yeah, I think I'm going to do that. Um, yeah, this is going to be kind of crazy. I'm going to do 2x option sentiment too. This is going to be one of the more interesting filters I've ever done. So hold on to your hats, everybody.
Did you mean to share your screen?
I'm not gonna do this part is boring. I mean, I guess like I'll just do it. I think yeah, it might be more like I'm just like moving. Uh, I'm just gonna be moving around I'm just like doing boring like data manipulation here. See, we have to unmerge this, delete that. Wow.
Peter Lukes is asking if we're hiring at Prospero.
Yeah, it depends on the position. I mean, we're starting to grow slowly, but yeah, like feel free to send me your resume, George at Prospero.ai. Um, wait, minus, I think we wanted to do um growth. I think we're gonna have to do this. It's gonna a lot of work to do here, unfortunately. All right, so what is this? 25? No, we need five more. Or actually, no, we'll do 12 each. We're gonna do one less. Um, all right, we're gonna see. That's a little boring, the setup work, but I promise it'll get interesting eventually. All right, actually, we're gonna start. Oh no, we like to do. So our numbers are as fresh as possible. We actually like to get everything set up before we do anything here. Mhm. So we are going to merge here. All right. And I do this 2x weight thing. So when we get big filters like this, we don't want net option sentiment is always more important. So we're just like making sure that we don't like drown it out when we include this many other signals. All right. So that's good. Oh, we just need full plus. We're almost ready. I hope this wasn't too boring for you guys. It's going to be, especially those that don't pay for our paid newsletter, you're going to get like some free paid content here. Oh, speaking of that, we are going to, everything's going to go really fast after this, I promise. We're just getting it all ready so we get, as I said, the freshest numbers possible. Steven, you're going to have a job to get me like the current net option sentiment numbers when we're ready.
I'm in position. Prospero's open.
QQQ and SPY.
QQQ 54, SPY 23.
No, not yet.
Oh.
When we're about to like, yeah, when we're about to print it. We'll get this. All right, and then we're gonna be off to the races then. We're not gonna be that complicated. And then we're off to the races. All right, we have this ready. Yeah, we're gonna do all of that. We need the count is being blocked. All right, that's 12. So we need this. This. And then we want this to be green. And All right, minus, plus, plus, and plus. All right, now we're off to the races. When did this come in? 12:07, whatever, that's close enough. We're doing it. Unless we hear it like buzz off. We might hear it buzz off like very quickly. And then we might quickly now. Now it's too late. Now we're going. We're committed. All right. We have Dark Pool next. Do you remember the order? No, we're actually abandoning. We want the fresher numbers. See, I said we were going to do it. We really like to get the fresh numbers. Profitability, social sentiment. Okay. I'm going to try to remember roughly, but it doesn't matter that much. We just have to like paste them in the right order. Dark Pool. Then I think net options. Social. I think social was one of the last. I think social was last. I think it's profitability. Oh man, we just got another one. We're not going back for it though. We're too far in. Oh, we need to do one more thing. Now we're ready. It's our biggest filter ever. I might get some new names that are interested. Ooh, meta short pressure down to 54. I want to add that again. Oh God, we might have messed that up. No looking back. I think we're gonna add Tesla. Ooh, TSM. Oh, I hate when this happens. MasterCard. Some interesting names here. All right. Upside breakout. This is going to take a hot second, but I'll be happy to have gotten the newsletter out for the day. Oh, I got the order right. Look at me. Oh, no, I didn't. I was one off. Good thing I figured that out. That could have been a tragedy. All right. I wonder if anyone's still here. I haven't checked. Well, we already have that in our portfolio. I shouldn't have spent time. I don't think we're going to load up on it anymore. Oh, these. We added MSFT. Let's look at Tesla technicals because we might add that. Um, Not quite there. Yeah, okay. We're gonna look to time that a little more, but we might go 2x that. We're gonna go 2x that in our model portfolio. All right, but now Taiwan Semi isn't interesting. I like Taiwan Semi. Ooh, interesting. Ooh, okay, we're doing it. We're doing Taiwan Semi. And how about MasterCard? Sure. We're doing MasterCard too. Okay, now let's go Bears. Let's go to the Bears. Bears are here. Okay. Now we're gonna go to the bottom. We need 12. Oh, look, that PBR is there. Very happy. We added that, but We still have people watching, Steven?
Oh yeah, we have 8 loyal viewers right now.
They've stuck it
We're,
out.
they're getting their money's worth today.
Yeah, we really went overtime. Well, it's a good, especially if they don't get the model portfolio. If they're not paid users on that, this is a good some content they don't normally have access to. All right, we're gonna go bottom up. I'm not sure. Let's see how we feel about CubeSmart. Oh, I might want to just like stop to buy Tesla now. Not yet. All right, don't get distracted here. We got to finish this one thing at a time. If people can't tell, I'm very unsure about that Tesla thing. Cube, let's look at it on the hour. Cube, I like that. I like what's going on the hour. Yeah, we like the trend there. We're adding Cube. All right, we got a lot of these biotech here. I recognize BLFS. Yeah. Okay. I'm staying away from Redfin for now. It's been so we've made some money on Redfin, but it's just been so volatile. You see, it's recovering. Yeah, we're not doing Redfin. See, sometimes it's good to check both sources. SMG. I feel like I recognize that name. Oh yeah, Scott's Miracle Grow. No, staying away from that. Sorry, SMG. RF. Oh, our old friend Xerox. We're not going to add more Xerox. Well, I've seen this here. Regions Financial. Yeah, I don't like that. Um, RF, not Xerox, SWX. Yeah, energy's been a little disappointing. Yeah, I don't. That's too confusing. It's almost time for your. It's almost time for your. Did I say HIE? No, I think HIW. HIW. Hmm, sorry, not doing it. ARW. More pharma. I don't think I'm going to do that just because we added that other pharma company. No, we're not going to do it. Okay. National Vision Holdings. No, not doing that. I've been seeing this coming up. No, not doing that. All right, well, we're going to add PBR because we actually added that in the newsletter picks and I haven't added it to the monitor portfolio yet. And then we're done. Yeah, we're definitely done. Okay, so now we're going to, all right, it's your time to shine, Steven. Tell me the updated or just like memorize what QQQ and SPY and an option sentiment are.
On it.
What do we got?
QQQ is 53 and the SPY is 35.
Wow, our call at the beginning of this live stream looks really good that it could turn the other way. I'm feeling pretty proud of that. Okay, we're gonna send this out. There, done. All right, we're getting out of here. Any other questions? Oh wow. Thanks. I'm glad it's your favorite part. Oh, I gotta stop this weird loop. Oh no. Stop sharing. All right. Any other questions before we go? Oh wow, we got 10 people that watched to the end.
See, that's why people got to watch the whole thing because the thing you said in the beginning could help people out if they just are tuning in now. Go back and watch and
Yeah,
see what George said.
yeah, definitely, definitely. Could have made some nice money going long the SPY or QQQ. All right. Did I get your email right? Let's see. George at Prospero.ai. I don't see anything from you, from anyone. Um, what's your, yeah, I don't know if it went into spam. If you emailed George at Prospero.ai, that should get to me. Um, but yeah, if you subscribe to the newsletter, if you respond to the newsletter, all that goes to me. But I think for now, I gotta get moving. Well, actually, sorry, I'll just drop it here. Oh, the address.
We got some nice praise in the comments. Shane Caven or Cavan, Wolf Stigma. Thank you guys for watching. Happy you guys like it.
Yeah, thanks. I hadn't seen you commenting before, Shane, but thanks. All right, we're getting out of here. We'll see you guys Wednesday.
Back Wednesday, 3 p.m. See everybody there.
All right, bye.
Ta ta for now.